Welcome student. I am Assistant Professor Saili Patel from Sarath College of Arts, Commerce and Science, Department of Commerce. Today I am going to discuss with you topic from SYBCOM SIM 3 syllabus, that is the subject of corporate accounting, unit number 4, valuation of shares. So in this chapter we discuss some points. Point number 1, what is the meaning of valuation of share? Then need for valuation, factors affecting on the valuation of shares, methods of valuation of shares and some formats, and then numericals. Numericals will be discussed with each separate session. So in this first, what is meaning? The value means an amount regarded as a suitable equivalent for the something else. So you can say fair price or return of investment, return of items, goods or services. Value is worth in usefulness and importance to the possessors, means the person who valued something. So the valuation is an act of process asserting the value of price. It is an estimation of worth. In case of valuation of shares, usually listed shares are transacted on the basis of stock exchange. So, stock exchange quotation. The shares of joint company quoted on the stock exchange have value different from the face value. The stock exchange price of shares are not generally acceptable because the price quoted in stock exchange is based on the demand, supply, business cycle, etc. The option of the investor and their fear, case, investment policy, etc. also reflect on the price of shares. So what is valuation of share? Means it is a determination of fair value of share shown in the balance sheet. Valuation of share does not mean putting the value of share owned by the shareholder as on the date of balance sheet. It is an examination of the value of share capital. Valuation certifies the correctness of the values of shares. So it is necessary to every business or anyone. There are some particular, yes, it is necessary, and that's why there is a need for valuation of shares. So the first heading, that is the valuation of wealth, excise duty and wealth tax purpose for amalgamation and absorption of various schemes, for gift tax purpose, for discharge of any liabilities or settlement of due in exceptional nature, purchasing shares of for control, for selling shares of a shareholder to a purchaser which are not quoted in stock exchange, for the conversion of one class of share to the another classes, and for the compensation made to a company when the said company is being nationalized. Means the valuation of share is important while if the shares or the company is amalgamated, absorbed, or then means transferred to the nationalized companies for granting loan on the basis of security of share when the shares are held as a security or investment. So there is a need of valuation of share is an important part. It is necessary to value shares for this purpose. Now, when we calculate or value the valuation of shares or value ascertained for the each share, it is important to identify what are the factors affecting the valuation of share. It is the nature of company's business, economic condition of the country, other political and economical factors, possibility that is any changes in excise duty on goods produced or etc. Demand supply of shares, proportion of liability and capital, rate of proposed dividend and past profit of the company, yield of other related shares of stock exchange are the important factors affecting on the valuation of shares. Now we discuss there are the three methods: net asset methods, yield basis method and fair value methods. In net asset method, net asset method, the valuation of company or the shares is based on the assets of the company. It is known as asset basis or the asset backing method or net asset method. At the same time, the shares are valued on the basis of real internal value of the asset of the company, and that is why the method is also called intrinsic value method. The intrinsic value method or the real value basis method. This method may be made either on or a going or a continuing concern business on breakup value basis. So when we calculate the net asset methods, we have to take precaution or to consider some points. That is, the value of goodwill will be ascertained. Fixed asset of the company disclosed or undisclosed in balance sheet are taken at their releasable value. Floating assets are to be taken at a market value. Remember to exclude fictitious assets such as preliminary expenses, accumulated losses. Means if it is appear on asset side, it is not considered for the calculation of net asset method. Provision for depreciation, bad debts provision, etc. must be considered and reduced when you calculate the net asset releasable value of that particular asset. Find out the external liabilities of the companies payable to outsider, including contingent liabilities. So in this part, when we discuss the outsider liability, it includes the debenture as well as creditor, bills payable, or any other provision, that is the provision for taxation or any other method. So in this heading, we just discuss how we calculate according to net asset method. In net asset methods, these are some points when we discuss. It is important points while calculating our valuation or prepare the net asset methods. This is the first step to find out the sum values of your assets. With the help of these steps, computation of net, step 1, computation of net asset. How you compute or calculate? First, net asset, that is the all fixed asset, including current asset at a releasable value or value mentioned in your adjustment. That is the total A or the asset, total assets, less liabilities. Liabilities include debenture, creditors, bills payable, provision for taxation and other liabilities. So total liabilities, that is the total of B. Total net asset A minus B. If the preference shareholders are present or the amount for the preference shareholders with their dividend are present, it should be reduced from the net asset amount. When you reduce net asset less preference share or the amount of preference share and its dividend, you will get net asset available for equity shareholder, or you can say the same word, that is the funds available to equity shareholders. With the help of this, there are the two steps. First, calculate net asset and then calculate funds or the net asset available for the equity shareholders. And then calculate or use that formula for the value of each equity share according to net asset or the intrinsic value method. By the formula, net asset or intrinsic value of each equity share is equal to funds available to equity shareholders divided by number of equity shares. It will give you answer per share value as per intrinsic method. Now we discuss with the second method, method 2, yield basis method. Yield basis method or yield method of valuation of each equity shares. Yield means it is a rate of return on investment which is invested by investor. It is always expressed in terms of percentage. Since the valuation of share is made on the basis of yield, is also called, therefore it is called yield basis method. In this, there are the two methods on profit basis and on dividend basis. When we discuss the profit basis or dividend basis, we have to compulsorily calculate 3 steps. That is the average profit. Step number 1, it is calculated with the formula sum of all years profit divided by number of years. Then calculate the step number 2, maintainable profit, whereas the maintainable profit is calculated with the formula average profit less transfer to any reserve mentioned in your question. Then for step number 3, whatever the capitalized value of profit is calculated by the formula maintainable profit into 100 divides NRR, that is the rate of return, is always mentioned in your question. So when we discuss the valuation of this method, first method is there on profit basis, value of each equity share on the profit basis. Then first 3 steps are compulsory for both the calculation, that is the A, first on profit basis and second one on dividend basis. While you calculate on profit basis, calculate the value of each equity share as per profit basis method equals to capitalized value of profit divided by number of equity share, that is the total number of equity share present in your questions. Or second method, that is the value of each equity share on the basis of dividend basis. In this you have to calculate, or you have to understand two steps. Step number 1, calculate rate of dividend if it is not mentioned rate of dividend in your question. If it is mentioned in your question, you can directly put that dividend on the in the formula. So the rate of dividend will be calculated by the formula maintainable profit divided by equity paid up capital. Make sure this is the total amount of your capital into or the multiple by 100. So the second or the step number 2 for the dividend basis, valuation on the basis of dividend. This method is more suitable because small block of shares, means when we discuss the smaller business or the small part of shares are considered. The method is calculated on the dividend basis. Expected rate of dividend, which is calculated in point A of second method, divided by normal rate of dividend, which is mentioned, that is NRR, into paid up value of each equity share, that is the per share value rupees 10, rupees 100, which is mentioned in your question. It will give the answer for your valuation of each equity share as per dividend basis method. So whatever the method you are using, if it is profit, if it is dividend, it is called yield basis method. So this is the second method. Now we discuss the last method, that is the fair value of shares. What is the meaning of fair value of share? It is an average of first two methods, that is the answer of intrinsic value or the net asset method plus answer of yield value or the yield basis method divided by 2, which will give the answer fair value of headings, fair value of each equity share. As you know, the fair value method, it is an average of the intrinsic value and yield basis method. So it provides the better indication about the value of share than the earlier of other two methods. Fair value is a combination of intrinsic value method and yield basis method. So it is a mean of all those methods and gives a proper idea about the valuation of shares in the of the organization. So by this way we discuss theoretical background of valuation of shares in the meaning, need, factors affecting, as well as the methods where we calculate it. From the next session we discuss about the how we solve the numerical problems related with the valuation of shares. Okay, thank you student.